Everyone. And uh, Lalita ma'am, can you hear me and can you see the screen? Okay. So we start our session now, second session, and modus remains same that I'll continue my class. And meanwhile, if in between anyone has any doubt, then please raise your hand and ask the question. If you're not able to understand anything, then please do ask at that time itself. Or at the end of session also, we'll have a question and an answer, and you can clear your doubts. So I'll just briefly cover what we covered last time. We had a first session on technical analysis in where we covered what is technical analysis, what are the advantages of technical analysis vis-a-vis fundamental analysis. Then we read about little bit about charts, types of charts, line chart, bar chart, and we came to candlestick charts. And then we learned about little bit about candlestick. And before that, we learned about the that market moves in trend, and we have to follow the trend. So I'll just quickly recap it that what happens is that technical analysis helps in identifying entry and exit point. It helps in analyzing, visualizing the actions of market participants from the stock charts. And because of these patterns, some patterns are formed because of that, and we are able to identify those patterns, and which can help us in identifying an opportunity which can help us in a short-term trades. Uh, Technical analysis is used by fundamental investors also. And most important part for technical analysis is that it is applicable to all assets class in all time frames. It's something like driving a car. So once you have learned how to drive a car, so it doesn't matter whether you are driving a Maruti car or Ford car, you will be able to drive a car. Similarly, once you have learned technical analysis, you'll be able to apply it in all kind of asset class in all time frames. So in today's session, what we'll do, we will just quickly revise our single candlestick patterns. We'll just brush up to it. And thereafter, we go to multiple candlestick patterns, followed by support and resistance, importance of volumes, followed by trend line channels. Then we'll come to the very important part, which is known as chart patterns. And personally, I feel that's the most important part of technical analysis, that is chart patterns. We will go through some reversal patterns and continuation patterns. So, as I covered last time, we covered single candlestick patterns and we covered Marubozu, in which we covered bullish Marubozu, bearish Marubozu, doji, spinning top, paper umbrella, hammer, hanging man, and shooting star. Marubozu was a candle in which either it will open at bottom or top, and it will close other way around. Suppose it opens at bottom, then it closes at the high end of the day. Similarly, bearish was opening at the high end and closing at the day's low. And I covered that it can form any time, and there were some certain examples which were given that how a bullish Marubozu looks like, bearish and bullish. And last time I was told that you can, like, I guess whenever you feel like, just ask me to zoom in. So I will zoom in. It will be easily visible to all. They were example of Marubozu, and then we covered that it doesn't matter that what is the prior trend in this case, and entry is either at the end of the day at 320 or at the next day, depending on kind of trader you are. Stop loss is at the low of the candle. Similarly, we covered spinning top, and also we covered doji, and we said that doji and spinning top basically shows indecision, and it doesn't shows any signal that whether it's a buy or sell. It just shows that there's a fight between supply and demand, and traders are fighting among each other to find out. And we showed some examples of spinning top and doji, which can be seen in the chart. And then we covered about paper umbrella, and we said that paper umbrella is like it has a long shadow. It's like looks like a hammer. It can be formed at the bottom or can be formed at the top. If it is formed at the bottom, it's known as hammer, and if it's formed at top, it is known as hanging man. The entry is again either at 320 or at the beginning of the next day, and stop loss is the high or low of the candle. That was about paper umbrella. Then we showed some example of paper umbrella when it has been formed at the top and when it has been formed at the bottom. So this is when it is formed at the top, and this is when it is formed at the bottom. So this is paper umbrella looks like. And apart from paper umbrella, we also learned about shooting star, which is the pattern which is formed at the which indicates reversal. Again, prior trend is important. It should be trend should be up and indicates reversal of a pattern. And entry is again either at the end of the day or you can take it at the beginning of the next day. And stop loss is again at the high of the day. So to briefly summarize it, single candlestick patterns is that it has a paper umbrella which can be either formed at the top or bottom. If it is formed at the bottom, it's called hammer. If formed at the top, it's called shooting star. Hammer is a bullish pattern and shooting star is a bearish pattern. It also shows that there's a buying opportunity and the stop loss we have discussed, where has to be the stop loss. Hanging man, shooting star, all has been discussed. However, like no one has asked me, and even I have not told deliberately that what is the target. Like we have discussed the stop loss. Okay, this is the stop loss, but we have not told about the target. And I thought someone will ask me that what is the target, but we'll come over it. That how do you find out targeting this kind of uh, okay. So we'll come over it and that what is the target, and it will happen in the subsequent part of the session. Now we move on to the second thing, that is multiple candlestick patterns. So till now we have read only about candlestick patterns. Now we move to multiple candlestick patterns. As the name suggests, it is like pattern which is formed by multiple candles. It's not a single candlestick, and it has. I will say that reliability of multiple candlestick pattern is more than the single candlestick patterns. So we start with the first pattern, which is known as engulfing pattern. Again, it is as shown that what happens prior trend is important. Let's suppose there's a downtrend, and then what happens? Market has been declining for the last 2 3 days, and then one day happen that market opens lower than the close of the previous day, and may go further down. But for the day, then there is a buying, and it closes at the high of the day, and where it engulfs the candle before that. It means whoever has sold today, like a day prior to that, is feeling either feeling regretted or even lost. He feels that had I hold my position, then maybe it would have been other way around. So this is a bullish engulfing pattern, which is a very strong reversal pattern and followed by many traders. So this is the example of a bullish pattern where we can see that Nifty was in a some sort of uptrend, and thereafter the correction set in, and it was reversed with a bullish engulfing pattern where market was declining from last so many days. It opened down, but this candle covered uh, all the loss which was made on the previous day and closed much higher. So this is a bullish engulfing pattern. And again, it's a directional trade. Prior trend is important. Trend has to be down. It indicates reversal, and entry is again either at C20 or at the next day in the morning, and stop loss is the low of the candle. The opposite of that is a bearish engulfing candle, as the name suggests. It's just opposite of bullish one. This happens when the market has been uptrend, market has been going up daily, and then there's a gap up opening. And after a gap up opening, there's a constant decline in the market, and market closes at the lower end of the day and covering all the gains of the previous day. So this is the reversal pattern again, and as you can see in the chart, this is a bearish pattern in which market was in uptrend, and then it consolidated for some time, and then there was a gap up opening, and this candle covered not only a day prior, it covered another few days also. So whoever has been buying from last 3 4 days is in loss now, and that marks a kind of a reversal pattern, and thereafter market has a substantial downward move. So as it was case of bullish engulfing pattern, the same is the case with bearish engulfing pattern. It helps in directional trade. Prior trend is important, and it indicates reversal. Entry can be at P20 or next day, and stop loss is again at the high of the candle. Then there's a pattern known as bullish piercing. So what happened in a bullish engulfing pattern? The whole candle was covered, but in bullish piercing pattern, whole candle is not covered, but close to 50% or maybe little more than 50% is covered. But it again marks a change in trend. So as we can see, this is a Nifty chart, and it was a chart somewhere which was formed in when market has a consolidation. It was going down for some time, and there was a reversal pattern was formed in which, if you can see, this is a bullish piercing pattern in which market had a gap down opening, and it covered close to about 50% of the previous day loss. And so this marks a end of uh, started. So as in the case of other candlestick pattern, it is again a directional trade where knowledge of prior trend is important and indicates reversal. Entry and SL is same as previous one. Entry either at T20 or next day at the beginning of the day if it's a gap up opening, and you can put a stop loss at the low of the candle. Just opposite of this is dark cloud pattern, in which there is a uptrend and then market opens higher but closes down and covers almost 50% of the previous day candle. So this is I have taken again from chart of Nifty only, a dark cloud pattern in which market was an uptrend, it went up, and thereafter a candle was formed in which it covered more than 50% of the previous day gains, and thereafter there was substantial down move. So this is dark cloud pattern. It remains same. Directional trade, prior trend is important, indicates reversal, entry either at 320 or next day beginning, and stop loss is the higher end of the candle. And then there's a Harami candlestick pattern, in which what happens that market is in downtrend, but next day when market opens, it's not, it's like a gap up opening. If you see, it's a gap up opening. It doesn't closes at the higher, it doesn't cover the whole day, but whoever is short here or whoever is like has sold, he will be in doubt now, because now market is a gap up and it doesn't go down that day, and this is known as Harami candlestick pattern. So as I've covered, the name has been picked up from Japanese terminology, so don't go by the name. Similarly, opposite of that is bearish Harami, in which again candlestick pattern is formed, which is market has been uptrend and market has a gap down opening, and it doesn't cover the whole candle but covers substantial part of it. So this is just some examples which I have taken. Like this was the Adani Green chart, which now it's not a very clear uptrend, but it was some sort of uptrend, and this is a like kind of a Harami where market went down for 2 days and then thereafter just stopped for 1 day, and the candle is inside the previous day candle. Similarly, this is like a bearish Harami where market was in uptrend and then there's a gap down opening, and the candle though remains inside it but covers a substantial part. So again, this is the directional trade. Like it's like you try to if it's an uptrend, then you be cautious, or you can take a direction. You take a trade in the opposite direction. So knowledge of prior trend is important. It indicates reversal, and entry is again either at 320 or the next day. And SL in this case will be the top of the previous candle. So this is what Harami candle is about. Now there is one more pattern which is again a very important pattern known as morning star and evening star. So morning star is a bullish pattern as shown. In this, what happens that market is in a downtrend and market is going down. Next day there's a gap down opening and market makes a very small range or sort of a doji formation. And a day after that, there is a gap up opening. And thereafter market reverses and almost covers all the losses of our previous 2 days. So this is known as morning star. It again marks a reversal in the trend. So this is as shown in the picture. Like this is how what morning star looks like. There's a downward trend, then there's some sort of gap up and a bullish hammer, and thereafter the next day is a bullish candle. So this is again a chart of HDFC Bank in which morning star is marked. There's a gap down opening, market remains in a range, makes a doji, and next day there's a gap up and market rallies. And it again marks a change in the trend. Opposite of this is evening star, where market is in uptrend and now there's a gap up opening. And after a gap up opening, market makes a small doji or a hammer sort of formation, and thereafter next day is a gap down and market closes down substantially. So this is also a reversal pattern, and chances are there that market will have a downtrend after that. So again, some examples are there, like it's a Nifty 50 example only, in which there was some sort of uptrend, and then there was some sort of doji. Next day, market opened down, and again kept on selling. So this is a formation of a evening star. So just like morning star, evening star is a opposite of that. It helps in directional trades. The prior trend information is very important in both the cases. It's like it's in morning. If it's a morning star, then trend has to be down, and if it's an evening star, the trend has to be up. Indicates reversal. Entry in this case is at the end of third day. Like either you take an entry at the 320 of the third day, or in the morning of the fourth day. And stop loss is the lowest level of the morning star. So whatever the morning star low is there, I'll say if this is the candle, so this stop is the stop loss for this. And similarly, opposite for the evening star, opposite for the morning star. So we have learned about certain multiple candlestick patterns. So there are numerous more candlestick patterns. So now I have covered in my section just about 13 or so. But to be speaking, there are many more. And there's no point of learning so many because these are the most important ones. And these patterns also you don't have to use blindly. You have to be seeing that you have to be used in confluence of some other indicators. And see what happens in technical analysis, you will find there are a lot of indicators, a lot of oscillators, a lot of things are there. But finally, learning everything is not so important. What is more important is that we focus on few indicators, few technical things which are able to give you comfort and which will give you some signals. And thereafter, it's all about money management and psychology, which will cover in the later sections. So I'm not covering all the candlestick patterns, but relevant candlestick patterns have been covered. I'll just cover once again the important aspects of these candlestick patterns that multiple candlestick patterns, unlike single candlestick patterns, involve over two or more trading days. The bullish engulfing pattern have two trading days. The risk taker initiates a long trade at the close of day two after enduring D1 and D2 together from a bullish engulfing pattern. A risk averse will initiate the trade the day after D2 and near the close of the day. So stop loss of both the bullish engulfing is the lowest low between D1 and D2. Then the bearish engulfing pattern forms at the top end. The risk taker initiates short trade at the close of day two, and thereafter the risk averse trader will initiate a trade the day after day two. Now, important point is the presence of doji after engulfing pattern tends to catalyze the pattern evolution. It means suppose there is a bullish engulfing pattern, and after a bullish engulfing pattern, there is a doji form. So it increases the chances of again that top has been formed increases. So a presence of doji after a bullish engulfing pattern or a bearish engulfing pattern actually further catalyzes the further emphasis, give more importance to the multiple candlestick pattern. Then we covered about a piercing pattern and a dark cloud pattern, and we covered that it's about 50%. We covered what is the stop loss. Then again, we have not covered what is the target. So now we come to the target part of it in the further session. That what is the target? How do you find out target in these kind of candlestick patterns? Not so target is we are able to find with the support and resistance. So if you are able to find some support and resistance, then we can see okay, this is the target for that pattern. So let's suppose we have a bullish engulfing pattern has been formed. And now we see, okay, bullish engulfing pattern has been formed and we have bought that stock. So we will try to carry it on till the resistance level. Okay, and how do you see the resistance? That we will study now. What is support and resistance? And similarly, other way around also, suppose there's a bearish engulfing pattern has been formed or some bearish signal has come, then we'll carry that position up to the support level. So what is support and resistance? Support level and resistance level are basically levels where prices tends to take support. So let's suppose our stock is going down, like in this case, our stock is going down and it falls from 57 to 51 rupees or close to 50 rupees and it bounces from there. It bounces from there, goes to 54 rupees, again comes to 50 rupees and again bounces from there. And then again comes to 50 rupees and again bounces from there. So we can say that at level of 50 rupees, many people are ready to buy their stock. So basically what is happening, demand for the stock is coming at 50 rupees. So the 50 rupees, we can say, okay, it's the support of the stock where stock refuses to go down further and buying comes in. So that's the support for any stock. Similarly, there's a resistance level also. What is resistance level? That suppose the stock goes to 39 or 40 rupees in this case. From every time it goes to 40 rupees, some people start selling it. So what happens? It goes to 40 rupees, it comes down. It again goes to 40 rupees, it again comes down. And every time it goes to 40 rupees, there's a some selling. So we can say that, okay, at 40 rupees, there's a resistance for the stock. So support and resistance are very important and they should be analyzed. We should analyze this support and resistance because this is important part of a trend also, which we'll cover subsequently, and important part of trend reversing also. So what happens to support and resistance? The support and resistance level are highly volatile. And traders should not just buy, okay, that support is coming. Okay, last time it took a support of 50 rupees. So this time again it will come to 50 rupees, I'll buy. It should not be like that because there are breakouts also, which we'll cover later. In case you are initiating a buy or sell, it has to be in confluence of other trading signals. Confluence means, let's suppose we know a stock is at 50 rupees and there's a support. And now we see a bullish engulfing pattern forming at 50 rupees also. So now we can say, okay, there are two things now, support pattern also, and there's a bullish engulfing pattern also. So now we can say, okay, now I can take a chance that, okay, I can go long because it is supported by two kind of indicators. One is support and one is other is bullish engulfing pattern. Now what happens is not that support and resistance will be held forever. There will be breakouts also. So like in this chart, you can see that our stock was there at 10 rupees, then it came down again went to 10 rupees. But this time when it came down, it did not go down as much as it went last time. Like last time it went to 8 rupees, but this time it went to only 9 rupees. So we can see, okay, what is happening? That resistance is there. People are, whenever the stock is going to 10 rupees, people are selling it. But then buying is emerging even before a level of 8 rupees. So what is happening? The demand of the stock is increasing. So this time when it goes to 10 rupees, whatever whoever wanted to sell at 10 rupees is already over maybe, and there are no more sellers. At this point, what happens? Stock start going up, and all those people who have sold at 10 rupees, either they will run, either they will cut their losses if they're short, or they will may become a buyer, or maybe the buyers are more, and then the stock breaks out on the upside. So apart from this, there is also known as traders remorse, which we known as like what happens that once the support is broken, it is generally retested, support or resistance. So like in this case, you will see so stock was in a range of about 52 to 45. It was in a range for some time, and then it broke the range of 51. So when it broke the range of 51, it went up for some time. However, it came back and it tested the same place, like it came to 51 again. So what happens every time? Once a resistance is broken out, the same resistance becomes a support and vice versa. If support is broken down, so that support becomes a resistance. So as we will see with some live chart, some charts in Indian stock market to make it more clear. So this support and resistance level, they determine stop loss and target. As we are covering with the other chart patterns, like we have not defined what was the target. So target is determined by resistance and support. So let's suppose there's a bullish engulfing pattern is formed here, and you go long here. So your target will be resistance level, and you will try to carry your position till the resistance level. So I have put some charts in which there's a clear support and resistance visible. So this is chart of Kotak Bank. It's a daily chart, and it covers the period from 2020 onwards till about right now. Now, as you can see, this Kotak Bank is a very it's in range. It's a range of 1630 is the low, and roughly about 2000 is the high. Every time it goes to 2000 level, there's certain sellers comes in, and the stock goes down. Then it again comes down to 1630 levels, and again buyers comes in, and again goes to 2000 levels. So we can assume that these are the support line and resistance line. Resistance is somewhere close to 2000, and support is 1630, and this has been going on from long time. And we'll assume that it will remain unless it is broken or it shows some pattern.
Which time frame we should use?
Yes. So, ma'am, what happens that longer the time frame, more important or more validity is given to the support and resistance. Suppose you are an intraday trader. So, intraday trader, you look at intraday time frame. Either you say 1 minute time frame or 5 minute time frame. But suppose you are suppose a swing trader, then you will like to look for a longer time frame, maybe 3 months or 6 months, or you will like to have a holistic view in which you will see the whole trend of last 1 year or so, and thereafter you will zero down. Okay, whether I can take this swing trade for a smaller time frame for about 2 weeks or so. So as a trader, depends on your time horizon what you are trading. If you're an intraday trader, then you will look at different horizon. If you're a longer term swing trader, then your horizon will chill. Completely depends on the trader, man. What is your time frame of trading? Once I'll cover the intraday trading, so I'll be able to dwell more upon it. So as of now, we are just learning about support and resistance. I will come back to it. So this is how support and resistance looks like. And it's not that support and resistance will always remain. Like this is a chart of lines, which is happening right now. So as we can see in this chart that it was an uptrend from 2020, and thereafter there was a now this is a daily time frame. So this now this active line acts as a resistance here. So this and thereafter it tested resistance for some time and finally it broke out this resistance. This resistance was at a level of 2136, close to 2136. Now once it broke out, it went substantially up. It went to up to 2636, close to about 500 points. And thereafter, when it corrected again, it again took support close to those levels only, 2136. Now it's not a point like 21, it's not 2136, it's like somewhere close to that zone. So now we know that okay, previous resistance was 2136, and this time again it's taking support at 2136. So the resistance which was there earlier has become a support now. And thereafter, again, it consolidated for a decent amount of time. I will say from 2022 till about 2024, it was just consolidating. And finally, it had a breakout recently. I'll say just about maybe about a week or 2 weeks back. So what happened once it broke out and it went substantially up. But before that, if you see again, there was a retest of support, which is known as traders remorse. So it broke out the support, broke out the resistance, sorry, and it tested back. It came back again and again to support at this point, and then again went higher. So this further shows importance of support and resistance. That once a stock is in support and resistance, and how these are formed, how this can be seen in the charts, and what kind of action can be expected from that stock. So I believe that some part of support and resistance is clear before we go to the trend lines. So till now, what we have been doing, that's to make it simple. We are trying to find out support in the horizontal level. Like we are saying, okay, support and resistance are in horizontal level, but in actual case, that's not the thing. They can be in a slant range also, which are known as trend lines. So we'll go to trend lines now, like moving ahead and going to trend lines. What happens in trend line? It helps in finding out the trend of a stock, and it also helps in finding out that if there's a change in the direction of a trend, and of course with the help of support and resistance level. So as I covered earlier, so like market moves in a up and down fashion. So there may be support and resistance. So once we see, okay, there are 2 points which are joining together and 2 points joining at the bottom. So we can say, okay, this is support and this is resistance. And it will remain it for some time unless it finally breaks down or break out. Okay, similarly, the like downward, if there's a downward channel, there will be resistance and there will be support. There will be a lower top every time and lower bottom every time, and it will keep on being in the channel till the time it finally breaks down or breaks out. And this can be, as I just covered, it can be horizontal, as I covered earlier, or it can be as covered in a channel, which I just shown. And like this, and not always, as I covered earlier also, it's not always a point. It's not always like 2136. There will be always a zone which can be overshot. So certain leeway has to be given that it can, overshot also, or go on the both side. See, so there are different kind of trend line depending on the kind of trend. Like if suppose there's an uptrend, so what will happen? We can see the all the points, like we can join the points together, and we can say, okay, market is in an uptrend till a time this line has been held, and this line becomes a support. So now suppose if you have a selling signal here formed, and you have to carry the support, then you will carry it till this support, which is the uptrend line. Or in the other way around, suppose you are holding a position and you are carrying a position and you believe that till the time uptrend is there, I'll carry my position. You will keep on carrying the position unless this uptrend is broken down. Okay. Similarly, there's a downtrend in which you are connecting all the highs, right? And this is a downtrend line and this becomes a resistance line now. So what happens? Sorry. So what happens now, if you are carrying a short position here, then you will try to carry till the time downtrend is there, unless this downtrend is broken on the upside. And as I covered earlier, they can be channel also, which can be a sideways trend, and market can remain in the range and finally can break out or break down. Now, how to build trend line is very simple. You have to just, if suppose you are building a support line, so what you have to do is you have to just connect all the points which are at the lower end, and you just draw a line connecting all the points. It has to minimum join 2 points, but the more number of points it joins, the trend line is that much stronger, and chances of that trend will continue are more. Similarly, if there is a downtrend, so all you have to do is you connect the again support line here. So this is the support line, and this becomes a trend line. Again, as we see here, this is the line which these are the points we are connecting bottom, and we connect all the bottom. So this becomes a support line, and all the top if we connect, so that becomes a resistance line. And we can presume that market is remaining in this trend lines, and this will be acting as resistance, and this will be acting as support, which has happened a lot of times. Okay. This is again just same thing in different diagrams, that how channels are formed, how supports are formed, how resistances have been formed in the trend lines. So this I've already explained that how do you sell. So support is broken, then we can assume, okay, now the trend is changing and we can take a sell signal. Similarly, on the upside, suppose it's a downtrend and now this line is resistance line is broken. So we can say, okay, now a lot of people, including us, who are all are seeing the chart, they will assume, okay, this trend is changing and they will initiate a buy and the market will go up. And there'll be different targets for the market. So suppose you have gone long, let's suppose there's a trend line here and there's a confluence of trading signal. यहाँ पे you find there's a maybe a morning star and you went long. So and this morning star is along with the this trend line. So this becomes a support. And second support will be if in case you have a longer time frame, you want to have a second support, then it will be like continuation of this trend line. If you continue to extend it, so this will become the support, which is a 2950 level. Target will be as per the Fibonacci level, which I'll cover in the subsequent session, that what are Fibonacci level, or you can take it as the top of the previous top, which was there, that can also be a target. How to find out this target we cover as we cover Fibonacci series and other technical methods. So this was more about trend lines, support and resistances. And this chart, you can see this is of Nifty chart, which is again from 2020 onwards. It's a daily chart. And you can see how beautifully it has maintained the trend line. So we can see that, once the trend started, all the bottoms were connected and it kept on moving. It kept on following it for a decent amount of time. Similarly, tops were maintained till the time it finally broke it. So once it finally broke the trend line, it went into consolidation zone. And thereafter, it consolidated for a decent amount of time. And now the present condition of the chart is the Nifty is again in a trend, like it has gone up, it has broken, and again it has resumed the uptrend. And if you again connect the dots, so again is in an uptrend, and this trend will remain like you can say, you can presume that trend will remain unless this trend line is broken, and you can always extend this trend line. Meanwhile, what will happen? Market will always touch the tops, may come down a little bit, again touch the tops, or may touch down bottom, and can keep on moving in the trend unless the trend is broken. So a lot of people uses this chart as a support and resistance level. Those who are long-term traders, or even some short-term traders also, for their trading activities. Now, it's not always that it is uptrend. Like this is the chart of Lions, in which we can see it's a downtrend, in which market kept on making tops and bottoms, and they remain in the range. So every time, like those people who are following the trend line, they can make it out. Okay, this is a support line, and they may be cautious if they are short or they are willing to take long. They will take cognizance of these lines. Okay, this is a line with it can be support and can reverse from there. Similarly, they will be very cautious of the tops also, that this can be top, and they'll be ready to sell at this point of time or ready to cut their long positions. And the trend will continue unless it finally breaks it. This is again a chart of Zomato, which I follow quite a lot, and it's again in an uptrend. You can see that the perfect channel is there, in which all the bottoms are joined, and markets keeps on going up, and within the channel, it finds resistance and it finds support. And this is a so how do you see validity? The more number of points is connecting, the more valid the trend line is. So, like suppose it's just connecting 2 points, so I'll be a little doubtful about it. But if it's connecting 3, 4, 5 joints, so that shows that the trend line is even more valid. Like more and more people are following the trend line, and chances of it continuing the trend will be higher. So this is now what we have learned about support and resistances. We have learned that support and resistance are important technical patterns, and we have to take a trade in confluence of the other trading signals, which we have seen in the multiple and single candlestick chart patterns. However, there's another important factor which is known as volumes, which are, I will say, one of the key factor in technical analysis, and which confirms a trend. So volumes are the one which confirms a trend. The presence of high volume shows the presence of smart money. So suppose some stock is going up with a higher volumes, chances are there that a lot of mutual funds, a lot of FIs are buying it. So chances of the trend continuing toward that side will be higher. On the other way around, suppose the stock is going up at lower volumes, chances are there that many smart people are buying this stock. Maybe the retailers are buying the stock. So chances of resuming the trend will be lesser. So I'll be not inclined to those stocks where volumes are less. I'll be inclined to those stocks where volumes are higher. Similarly, on the downside also, suppose volumes are very high. I'll assume that a lot of smart people, like a lot of DIs, a lot of FIs, a lot of mutual funds are selling this stock. That's why this stock is falling at bigger volumes. And other way around, suppose the stock is falling at lower volume, the chances are very high that this selling is not by the big players. This selling is by the small players. So chances of reversal are more, or I will not be so much inclined to play on the downside. So what you have to do, you have to take a trade towards like if it's like suppose it's a breakout, and if it is a higher volumes, so I can it's like further confirms the breakout that okay, this is breakout, and it has been with higher volumes also. So I'll be like more sure of the thing. Okay, if it's a breakout and volumes are higher, then I'll their chances are there ki I will take that trade on that side. But suppose it's a breakout and volumes are just like same as last few days, then I'll be not so much inclined to take a trade on the breakout side. So what you have to do, try to take trades which are confirmed by the volumes and try not to take the trades which are not confirmed by the volumes. Now there's a question which I'll ask that suppose someone buys 100 share and someone sells 100 share. So what is the volume for that? So most of the people feel that volume will be 200, but volume is not 200. Volume is counted as 100 only for that particular trade. So this is what was about the volumes. I'll just cover the chart once. So what happens? Suppose the price is rising and volumes are also rising. So it's a positive sign. But suppose price is rising, but volumes are not rising or falling. So it means that chances are there that price up move may not sustain. Similarly, if price is falling and volumes are also rising, the chances are there that trend will continue. But price is falling and volumes are also falling, chances are there that downward move may not sustain for a long time. So this is a chart of HDFC Bank. We all have been following HDFC Bank. It's the darling of our stock. And as we can see, it was in a certain pattern. There were some certain support lines also. And it broke the support line with very huge volumes. So as we can see that volumes, like this was the support line and it broke the volumes. Volumes are generally shown on the downside, and when it broke the volumes are pretty high. Like if you see the average of last few days and average and this volume, the volumes are very high. So we can assume now that this selling has been done by a lot of big players. This is not retailers who are selling it. Some big players are selling it. Big mutual fund, big DIs, or big investment funds. They are selling their stocks. So chances are very high that it will remain under pressure, and the downward trend, the support which has been broken, which will remain broken for a decent amount of time. Whoever has sold it here is not going to buy soon. So it's not that he's going to buy at these levels. So chances are very high that this will not. It's not easy for it to go up again. And again, this was a support line which has been broken. So this becomes a new resistance now. So any bounce will come. So I should assume that okay, this is the resistance line. It will not go up, or further downward trend will continue because support has been broken with high volumes. So this is the importance of volumes which plays in the technical analysis. Now again, this is a chart of Voltage. Now Voltage was in a downtrend for a decent amount of time, and it was like if you see, it was making a support and resistance. Let's suppose this was the resistance level, and market went below this line, and then again tested this line resistance level. Again, this time it went down, and again went to the same level, which is a support level, and again bounced to this level. But what happened when this time it came to this resistance level, there was supply and market went down, but it did not go down much. It went somewhere, at, it stopped at somewhere higher level than the previous low. So first time it happened that it made a low which was higher than the previous low. And then it started reversing from here. And this was the day when you can see there was a very huge volumes. And it is just close to the resistance level. So now there's a setup. I can see, okay, no, it is coming to the resistance level, but volumes are very high. Chances are there that this volumes has not been generated by retailers. This volume has been generated by very smart players or big mutual funds or big houses. So chances of breakout becomes very high. That okay, this is breakout, and further it is further confirmed by other patterns. It is the ascending triangle which we cover right now in some just in after a few slides or so, in which the bottom which has been formed is the higher than the previous bottom. So what is happening? The demand of the stock is increasing and supply is reducing. Every time there's supply at this level, but demand earlier used to come at this level, but now it is coming at higher level. So chances are even higher that this resistance level will be broken. And with volume, there's a confirmation that okay, volumes are also very high. So chances are even very high. So this gives a long trade, and thereafter the stock has gone up substantially from this point. So this is how technical analysis works, where we try to combine other patterns, confluence of patterns from there, and we find out okay, what side the market can move, or probability of moving towards one side increases. Okay. So volumes are used to confirm a trend. Okay. And as I covered, 100 share buy and 100 share sell does makes the volume of 100 and not 200. The end of day volume indicates the cumulative volume across trade executed throughout the day. So the bar which are seeing that shows the end of day volume of the whole day. High volume indicates the presence of smart money, and low volumes indicate retail participation. Uh, when you initiate a trade to either go long or short, always make sure if the trade has been confirmed by volumes. Now, it means that suppose there's an engulfing pattern, which we covered, bullish engulfing pattern. And in the bullish candle, when the green candle which is there, volumes are much higher. So again, it further confirms, okay, there's a bullish engulfing pattern and even volumes are higher. So probability of going higher is again. But suppose there's a bullish engulfing pattern and volumes are missing, then we can say, okay, maybe this is just because of some short covering. Actual buying is not happening in the delivery. So we can avoid that kind of trade. So these are the kind of things which like further convince you towards taking a trade in the direction of which indicators are indicating you to take a trade. So avoid trading in case setup doesn't have higher volume. So let's suppose with a bullish engulfing pattern, but you know that volumes are not good, then you should avoid that kind of trade. So that will increase your chances of profitability, and you will take more trades which are more, more short trades, or say probability of acting towards your desired level is higher. So this is what relevance of volumes are. And now we come to the most important part of the session, which I personally like is chart patterns. Though we'll cover a lot of other things like Fibonacci series and Elliott waves and other methods, but personally, I feel the chart patterns are the most important patterns, and they're very reliable patterns, and they help us to find out supply and demand. And I will rate them higher than all other indicators. So what happens? Charts give you trading signals, and charts just use this pattern to identify current trend and trend reversal, and to trigger buy and sell signals. Now, there are different kind of chart patterns. Generally, they are divided into two parts. One is reversal pattern, and other is continuation pattern. So in reversal pattern, we have double top, triple top, head and shoulder patterns, and some other patterns also. And in continuation patterns, we have flag formation, wedge formation, triangle pattern, which we'll cover as we move on. So now, this is the one more thing that most of the people want to find out the top and bottom. So we'll cover these patterns in detail, and we'll find out. We'll see some live examples also. And if someone want to ask a question at the end of it, wants to cover a specific stock, then we'll cover that also. So the first pattern is double top or double bottom pattern. What happens in this is, I'll just explain the diagram. Let's suppose market is an uptrend and it's making higher top and higher bottom all the time. So what happens now at the end of top one, it makes a higher top and then it comes down. It makes a bottom, which is again higher bottom. It went up again, but it doesn't cross the previous top. So sometime what will happen, it will just stop at the previous top, and from there a decline starts again. And this time when a decline starts, it either it crosses the previous bottom. So this is the double bottom formation, which is like kind of door theory that if the trend is up, then it should make higher top and higher bottom. So in the phase, the first confirmation of that trend is changing is it makes the same type of top, but it makes a lower bottom. And this is the first indication that top may be forming. And thereafter the downward trend resumes. Opposite of this will be double bottom, in which what has happened, the market is a downtrend. It forms a bottom, thereafter it bounces. But this time when it falls, it doesn't fall much. It just stops at that point, and thereafter the market reverses and crosses the neckline. And thereafter the uptrend resumes. So this is a formation known as double top or double bottom. That you have to understand understand it from the supply and demand point of view. That यहाँ पे supply of the stock was there, but demand emerged here. When the demand emerged, market went up. But then again, there were some people who wanted to sell it, and there was supply. But this time, these sellers just stopped it, and they could not take it lower. And demand again emerged at this level, and thereafter the market started going up. And thereafter there was a change in the trend. So this is a example of double top when the market is going up, made a double top, and then broke on the bottom. This is the example of double bottom where the market was going down, went up again, formed the bottom, found a support here, and then again crossed it. So I'll just show you some examples when Nifty has formed a double top. So this is the example when the double top was formed. Market was in the uptrend, top was formed, then bottom was formed. Market bounced on this bottom, but it broke down. And when it broke down, it just broke down in 2 days. Like it took it a decent amount of time to go up, but when it broke down, it just took him 2 days to break down. So that further confirms, okay, that downward trend may be resuming now. And as like other Once the support is broken, so that becomes resistance. So this line becomes a resistance again. Similarly, there's a bottom, double bottom is formed like this. Market is in downtrend, it falls. It's a nifty chart, just it's just a line chart, and it bounces a bit, and thereafter comes down again, takes a support here, and thereafter further continues up. Okay. So this was a double top and double bottom formation. And if the support, if the but we have seen stop loss. So what will be the stop loss in this case? In this case, stop loss will be the top of either you can take top of this as a stop loss or top of this as a stop loss. And once it breaks down, now we know that this is the support line which has been broken down. So this will become the resistance line. So once it has broken down, we can assume okay somewhere here close to this will be the resistance level. So we can revise our stop loss. How to do this in detail, we'll cover once we cover the how to execute a trade. Initially, we are just covering to find out the patterns and what are the implication of these patterns. Okay. Now, a very important pattern which like I have covered in my classes also sometime in the not in the classes in the group also is head and shoulder pattern. Now, again, head and shoulder is some sort of double top, but you have to understand the psychology of head and shoulder pattern. So, what is happening in head and shoulder pattern? The market is in uptrend. Okay, and what happened? It goes in uptrend, it makes higher top and higher bottom because it's an uptrend. Now let's assume that after the uptrend, this time what happens? It comes down, but it comes at the same level. At the same level it is coming and it takes support here. And thereafter, when it goes, it crosses the previous top. So people assume it's an uptrend because this high has been taken. It goes up higher, but again selling emerges and it falls to the same level. Now this line is a support level. So what will happen? A lot of people will start coming at this level again because they feel that okay, it was support earlier also. Wheels also this time also it acts as a support, and they start buying it. So market bounces again. So it make a right hand shoulder pattern which is almost the same as left hand shoulder pattern. But what happens? This time is not able to go up further, and market starts going down. And thereafter it breaks this neckline, and then further a downward move is started. So head and shoulder pattern is a very reliable pattern. It has been formed and it has been tested psychologically also a lot of time. And I'll say that chances of it happening and chances of it giving the desired outcomes are very high. Opposite of just this is inverse head and shoulder pattern where what has happened that market is in downtrend and market is making lower bottom all the time. So it makes a lower bottom but bounces, but this time it bounces almost close to the high. But further selling comes in because there are sellers sitting here and market goes down, breaks this level, goes down further. But what happens? Yeah, support comes and when market bounces, it doesn't make a lower top. It almost goes to the same type, which is a neckline. And now, यहाँ पे again, those who are selling here, they will again try to sell it here. They sold it here. Market goes down, but could not fall no too much down, and makes a higher top. And thereafter, demand comes in, and market starts going up, and finally it breaks the neckline, and the market resumes a uptrend. So, what is the target, and what is how to take this pattern? As I covered, this is left shoulder, head, and right shoulder. So suppose someone has to take a trade. So someone will take trade when he sees that this neckline is getting broken on the downside, and he will sell that stock. The top of the right shoulder will be the stop loss in this case, and the initial target will be also with the same width, which is from the neckline to the shoulder, right shoulder, and the final target will be from the neckline to the head. So this is how we define stop loss and target in this pattern. So like this is
Can you please repeat the target and stop loss for
right.
head and shoulder pattern?
So I will cover in this slide again now. What is the how to trade this pattern? So let's suppose in this slide we can see this is the left shoulder, this is the head, and this is the right shoulder. What happens when we see okay this level is breaking down or it is about to break down or we get some sell signal because of candlestick pattern. So we take a short trade here. So once we have taken a short trade here, initially we will keep a stop loss high of the right shoulder. Okay. And our target will be initially will be this target, this width will be the target itself. So I'll cover let's suppose this is 100 because it's not visible. I'll say let's suppose this neckline is at 100 and this right shoulder is at 150, for example. So once it is broken at 100 ka level, and this is let's suppose this is 180. So let's suppose once it breaks down, so this is 50 point ka gap. So we will assume that if the target will be 50 points, it means it will go to 50 points. And initially we'll keep a stop loss of also 50 points. And what happens? This will fall close to 50 points. So once your close falls close to 50 points, what happens? There's always some bounce. So some people will start buying it, and it may again go to a support level, which was a neckline. And thereafter the downward action will again resume. Our final target will be, this head. So let's suppose this was 80 points. So this will be like kind of if you go to 80 points below. Let's suppose it's 100, so we are saying 20 points, but let's suppose it's 1,000 and this is about 300 rupees the gap. So it will go down by 300 rupees or 300 points. Fine, ma'am.
So if it is, sir, sorry,
Yeah,
sir, if the first target would be 50 and the second target would be 30, right?
no,
If
it's
a short.
50 and 80. So I'll explain it with some more chart. Let me see. Yeah, okay. So, okay, what I'll do, I'll open a chart itself and we'll try to see if we can put it here. So can you see this chart, Bajaj Finance chart? Can you see on the screen a Bajaj Finance ka chart?
Yes, sir.
Okay. So let's suppose this is assuming to be a head and shoulder pattern, and this is a left hand shoulder where support is the 7,000 rupees and it went up to 8,000. Okay, then it came down, it went little bit above 8,000 and again came down to 7,000. Now this time it bounced from 7,000 level, it went to 7,800 levels and again came to 7,000 level. And now it broke down this level. Okay. And this breakdown was with good decent amount of volumes also. Yahan pe volumes are not indicated, but this was a decent volume. So our first target will be 7,000 plus these 800 points. So that becomes 7,000 minus these 800 points, it means 6,200. So our first target will be at 6,200, which is somewhere close to here, right? And we are expecting that it goes to 6,200. It may bounce from here and may test 7,000 level again. And again, resume a downward journey. And this high was close to about 1,200 points, 7,000 to 8,200. The final thing will be it may go down by 1,200 points, which is something like close to 5,800 points, which will be again coinciding into somewhere close to this level of support, which was previous support.
No, but the chart is
Right.
not there.
Ma'am, chart is not there because it's still getting. You can't see the Bajaj Finance ka chart, ma'am.
No, it's not the Bajaj Finance ka chart.
It is, ma'am.
Oh, we can see the chart, sir, where I think it's in your
got it.
slide.
I think
It's in
you're
your
not
slide,
able.
but your mouse pointer was not visible.
Okay,
The
I got
mouse,
it. I think
point.
you're right. I think so. So I'll share other screen. That's it. Okay, now it's visible. Now can you see my mouse moving and can you see the chart? Okay, fine. So
Yes,
I'll
sir.
explain again. So what happened, like this is a Bajaj Finance ka head and shoulder pattern. What happened that Bajaj Finance was in an uptrend. 8,000 was the level of resistance, so it went to 8,000 level. Then it came down and it took support. Last time it took support of 7,000. So somewhere we can assume that 7,000 level pe it took support. It bounced from there, went little bit above our 8,000, close to about 8,200, and again came down to 7,000 level. From here, that it again took support and again bounced from here and went to 7,800 level. And from wahan se selling came in and it broke down. Now, typical thing to see is that left hand shoulder is higher than the right hand shoulder. Okay, so it further confirms the pattern because what is happening, if you see psychologically, the market was in an uptrend, buyers were tired, it went to below this level, it went up, again selling came in, but this time buyers were not able to take it even to 8,000 level. Selling started coming at 7,800 level itself, and then it came back to 7,000 level. And you see the fall is faster than the rise. Okay, so all these things, further confirms that chances are very high. This trend, it, uh, it will work out. That pattern will work out. And when it broke down this level, now I have not marked volumes. Let's see this here. We put some volumes also, so it will be more clear. Okay, so now we can see that volumes are higher when it broke down on the 7,000 level. So it shows the presence of bigger players. That okay, bigger players are selling it. Further comes on the breakdown of 7,000 level. And now the first target will be, we can assume that at least it will go to, this was 800 points. So it will go to 800 points, which is 6,200. And this level was 1,200 points. So final target can be 1,200 points from 7,000 levels, which can go down to the 5,800 levels. So this is how we have a target, and stop loss will be, first stop loss will be, we can keep it as a high of the right hand shoulder. But once it has broken down, once it has broken down, so I can assume, okay, if I want to capture 800 points, I cannot put a stop loss of 800 points. So, but while personally I will do is, I will choose this line, 7,000 ka line as a stop loss, and I will keep on revising it unless it keeps on making higher top. Suppose यहाँ पे I have taken a short position, and initially I'll put a stop loss above this high of this candle, which is higher than 7,000. So once that market has made some top, it has further broken down. So I'll revise my stop loss to this point now. And if it further keeps on going down, I'll keep on revising my stop loss. Okay, so that way, what I'm trying to do is, till the time if the market is in downtrend, I am trying to capture the downtrend. And if the market reverses, and I'm out of it. So this is how I will trade. But the theory says something different. Theory says that this is the stop loss and this is your target. Okay, but you should understand the theoretical part also, and you should understand the other thing also, that how you are actually supposed to trade. So these things I'll cover in detail once I'm covering how to do execution of trade, especially when we are carrying out a session of being consistent trader. That how you are supposed to move your stop loss and how you are supposed to manage your positions. So I'll go back again to the presentation now. I hope it's clear now. Head and shoulder was clear.
Yes, sir. Yes.
Okay.
Yeah.
Okay. So as you can see the slide of head and shoulder. No, I'm not sure. Okay. So we resume the presentation. Similarly, this is a chart of Map My India. Now again, there's a head and shoulder pattern. If you can see, with the uptrend and market went down, it went up again, and then this is the line which was formed, and now you can see the shoulder is even smaller than the previous one. So no, it even further shows the weakness in the chart. That further in the market, when the stock tried to go up, there were not enough demand for it, and it reversed from even a lower, lower expected. What was supposed to do? It was supposed to at least go higher, but it reversed from there itself. So chances of breakdown becomes even higher. So this is how you're supposed to read the charts. That it's not always 10%, but it's something like this. Now this is the chart pattern which was formed by Nifty in somewhere in 2008 or so. What happened? Market was in a downtrend and then bounced. So, and it can happen in within trend also. What I mean to say that it's not a reversal pattern completely. It can happen somewhere in between also. That it made a head and shoulder pattern in between, and then finally it broke down. And how you can see now, this was the neckline. So it almost covered the same number of points, which was like this shoulder. Like if you see bottom is somewhere close to this, and then it bounced. It tested this resistance line again, and then it again thereafter it further resumed the downtrend. So similarly, like this was the head and shoulder pattern. Similarly, there's the inverse head and shoulder pattern. The psychology remains same, and we will just see one more chart in which we can see inverted head and shoulder pattern. So as you can see that market is a downtrend. It went down, then tested the line, further went down, made a head, and went up again close to this line, and then made a right hand shoulder pattern. Now this is inverted head and shoulder pattern. वहाँ पे क्या हो रहा है? यहाँ पे bottom is getting created. Yes, whatever supply for the stock is there is getting absorbed and is going further. And now it's not falling much. So it is making a shoulder which is even higher than the left hand shoulder. So it's not willing to go down even to this level also. So this further confirms the chances of breakout are higher. And यहाँ पे you start looking for patterns, volume indications, and all those things to find out a signal which will give you a breakout sort of thing. And once the trend line is broken, so thereafter a buy signal is given, and then people will keep a stop loss which will be close to the maybe little lower than the neckline, because neckline was the support line which become resistance line which became a support line, and thereafter we'll try to carry this trade. Now target is again, it will be as shown, final target will be high of the head. So whatever the high of the head from the neckline is there, that is the major target for this thing. Okay. And those who are conservative, they can keep it as a head, initial head as a target, initial shoulder as a target. And those who are aggressive trader who wants to carry their position, they can keep it as a head as a target. Now apart from, now we have had two patterns. One pattern was double top, and other pattern we have had head and shoulder pattern. Similarly, there's a pattern known as triple top, which I am not covering deliberately because triple top, I'll say, is not a very reliable pattern. But I have seen it's almost like a continuation pattern, so which we'll cover in the continuation pattern. Before that, I'll go to rounding bottom. So what happened in rounding bottom? That stock is in a decline phase, but it instead of it reverses very gradually from the bottom. It's gradually from almost like a rounding sort of thing, and thereafter it forms some sort of handle. So rounding bottom is almost like a cup and handle pattern also, which is a continuation pattern. And उसी को अगर वो bottom में बन रहा है तो उसको हम rounding pattern बोल देते हैं, ठीक है? So it's a U-shape pattern होता है, जैसे something like U-shape, bottom makes a new bottom, but it's a rounding, and thereafter it forms a handle sort of pattern, and then it breaks out at higher level. So I'll explain you the chart which is happening right now. This is a chart of Geo Finance, so which I covered some time back also in my one of the message in the WhatsApp also. Now this is a new stock which came on IPO and then had gone down, then it bounces and went a high. It made a high of close to 266 ka level. So this is level of 266, and thereafter if you see it went down gradually and it made a kind of rounding bottom. This is a rounding. If you remove the aberrations, it's kind of rounding, rounding bottom, and then it tested this level, which is a level of 250 or so, and at 250 it made a kind of handle pattern. Jahan pe you can see this is the kind of handle pattern. So actually you should understand psychology. But what is happening, that demand has come in, it went down. So first thing, it did not break the low of previous low. It reversed from somewhere close to there only. And then it went to the high of 250 level. From 250 level, when the supply came in, it went down, but it did not go down too much. Nothing close to this level. And yahi se there were candle jahan pe some strong buying was seen somewhere. And it went up again, tested level 250. Again 250 selling came in. But this selling again, it's not even going down to this level also, and finally it broke out. So this is a signal which shows, okay, there's a reversal pattern and chances of breakouts are higher. So, and now it's always a zone. You have to understand this also, that it's always a zone. It's not a cent to cent pattern. So 250 level it was there. It went up close to the same high of 266 and went down again. Spent some time here, and there were some bad results. After bad results, it consolidated for some point of time. And यहाँ पे just Paytm वाला thing happened, and this is again breakout in a huge volumes, and thereafter it's again consolidating now. And but what happens, like now, what is the support line? Support line wise, either you can take this as support line, which was at 250, or you can take this as support line, which was at 266. So it is above both the levels, 266 or 250. So traders who will take it, they will keep a stop loss somewhere here if you are doing gold long, or somewhere here 250 level, and will try to find the trend. So this is the example of cup and shoulder pattern. Its stop loss is again, like suppose if I am going long somewhere here, so stop loss is the low of the handle. That's the stop loss, and target is the width of the cup, like, or depth of the cup. So this is the depth. This level was 200 and this level was 250. So close to 300 will be the target for this kind of pattern. So,
volumes at this on all these changes would have a bearing the same way.
I didn't get you. So can you come again, sir?
See, if the at the time of increasing values, if the volumes are high,
yes,
then it confirms the uptrend.
Right, sir. So suppose volumes are high on a high good, a high volume on a green day, and on the next day market comes down, but volumes are low. So you can assume, okay, the market is just taking a breather. But
Okay.
because volumes were very high on the day when the market went up, so you can assume, okay, fine, this is normal correction, and it can we can presume it to go up further. But all these things you have to understand, sir, these are all probabilities. There's no 100% thing.
Yeah.
Only thing your probability is increasing, and you are seeing for the signals which shows you more probability towards one side.
Right.
So there's something like a pattern which is head and shoulder pattern also is a cup and handle pattern also, which is almost similarly as almost similar as which we have covered earlier, but rounding bottom. Same kind of pattern, head and shoulder pattern also. Only difference is that it is not forming at the bottom; it is forming somewhere in between. So psychology remains same, pattern remains same, breakout remains same, and target also remains same. The only difference is not forming at the bottom; it's somewhere forming as a continuation pattern. Apart from this pattern, cup and shoulder pattern, we also have a V formation pattern. Like what happens in V formation, it suddenly goes up quite a lot, and thereafter it comes down quite a lot. So truly speaking, these patterns, they do happen, but they are not tradable patterns. There is no stop loss, there is no target. They are just part of the market. You should just know that these pattern can also happen, but these are not tradable patterns. So these are just some examples of V bottom and V tops which have been formed in Nifty, and I've kept in a line chart so that they can be seen properly. Okay. So now we have seen some of the top formation pattern, and now we come to the more important pattern, which I personally like, are continuation patterns. So what happens? What I've seen people are obsessed, and even I'll say people in our group also are obsessed in finding tops and bottoms. Everyone wants to sell at the highest point, and everyone wants to buy at the lowest point. So that's the biggest mistake which traders do. That they are always looking for head and shoulder patterns. They are always looking for topping formation. Always looking at double top बन गया है, आपको यहाँ पे खींच जाएगा. And I have seen pattern कि okay, वहाँ पे higher top and higher formation बन रहे हैं, and people are saying कि नहीं ये तो head and shoulder का head बन रहा है. So because there is an obsession of finding out tops and bottoms. So you have to overcome this obsession of finding tops and bottoms if you want to be a profitable trader. You have to understand that profitable traders or successful traders never try to find bottoms and tops. They let the market tell them, okay, that this is the bottom and top is getting formed. So जैसे some people ask me, okay, इसका top बन गया है क्या, bottom बन गया है? तो assume अगर trend up है तो let the trend be assumed as up only till a time it is proven otherwise. It is proven that it has broken down. Okay, don't ever assume that top or bottom has been formed. And most of the profitable traders, they will make the money when they trade in the continuation patterns. So what are the various continuation patterns? The continuation patterns are like bullish flag pattern, pennant pattern, bullish falling wedge, bearish flag pattern, which we'll cover in the session as we proceed. So first and foremost is flag pattern. So what happens? Let's suppose market is in a downtrend and it starts falling, it falls, and thereafter it takes a breather. Now it will take a breather in a formation of a flag, in which it goes in a consolidation pattern, and thereafter it makes some tops and bottoms, which may be higher tops and bottoms, but this is part of a larger downtrend, and finally it breaks down, and this is the sell point. So this is a bearish flag pattern in which further it goes down. So if this is the point of breakdown, and if this is the point you have taken a trade as a breakdown point, so this will be your stop loss, and your target will be somewhere close to this length. And this is a bearish flag pattern. Similarly, in an uptrend, if market has been going up, so there may be a flag sort of pattern in which market will make some higher, lower tops and lower bottoms at lower intensity, and thereafter it further breaks out. So if this is your buy point, this will be your lower of this will be your stop loss, and this length will be your target. Similarly, there are pennants, which is very similar to triangle, only thing they are smaller in size. So what is happened? Suppose there's an uptrend, and now there's an uptrend, and uptrend is after uptrend there's a consolidation pattern, and thereafter it starts making a pennant, and it consolidates within the pennant, which is a smaller triangle, and finally it breaks out. So once it breaks out, again you will take a trade here once it's broken out, and your stop loss will be low of this, and your target will be minimum will be this thing, or if it's the long length here, then that will be the target. Okay. Now, similar to pennants, they are triangles patterns. Triangle patterns are patterns in which market has been consolidating in a range. It makes either higher tops and it can be symmetrical, ascending or descending. So this is a symmetrical triangle in which market keeps on going high and down, and it keeps on contracting. And finally, it breaks out on either direction, either down or up. And when it's breaking out, then volumes are higher, so it further confirms that uptrend has resumed. And you can take the trades in the direction of the pattern. So this is ascending and descending triangle. Let's suppose market is in an uptrend. It goes up, it tests the resistance level, comes down from there. It goes up again, but this time again comes down, but doesn't come down to the same level, makes a higher bottom. And again went up, come down, but again makes a higher bottom. So chances of breakouts are higher and further breaks out. If volumes are good, then it further comes from that trend. Descending triangle is something like market is coming down, takes a support, goes up, comes down, again bounces, but doesn't go up too much. Again comes down, again bounces, doesn't go up too much, and finally breaks down. So these are the continuation patterns, and these are the major continuation patterns. So I will try to say that most of the time you should be looking for continuation pattern to trade rather than looking for tops and bottoms. Because see what will happen, tops and bottoms will be formed once in a while. Though when the trend is reversing, the trend will reverse in a long time. It will not reverse in a day or two. But most of the people are inclined to find out tops and bottoms. Rather, I should say they should try to find out these kind of continuation patterns. So this is just a chart of IRFC, and I'll just show how frequently it has made a continuation pattern. So IRFC was in an uptrend. Thereafter it considered for a decent amount of time. Okay, and let's suppose this is the line. So it can say it formed some sort of triangle pattern where this was the top, it went down quite a lot, then it again came to the same line. This time it went down, it did not go down as much, and then finally it was about to break out. If I enlarge it and put it here, so it was about to break out. And this is the pattern, and you can see, okay, here it broke out. Okay, and thereafter it went substantially up. And after this substantially up, what happens? People try to say, okay, dip aa gaya, yahan pe I'll buy. No, don't buy here. Wait for some pattern. Wait for some pattern to get formed. Wait for some continuation pattern. And again, a continuation pattern was formed where it again remained in certain range for a few days, and it finally broke out. So you are supposed to buy it here, and not supposed to buy it at this place. You are not supposed to find out bottoms. Okay, you are supposed to find out breakouts. So again, यहाँ पे breakout होता है, market went further up. Okay, and यहाँ पे again there's a consolidation pattern, and now after the breakout of this consolidation pattern, now everyone is talking about RFC. Okay, so what happens? Now euphoria sets in. So it keeps on going up for a decent time. And if you are carrying it to the trailing stop loss, then you make a decent amount of profit. And now what happens? There's a reversal here, and it starts correcting. So now are you supposed to suppose this is corrected to this point? I just want to ask in the group, okay, is this the point to buy? Anyone who can give me answer? This end of the thing. Right. So right. So this is
No.
not a point to buy. Right. Very nice. So this is not a point. You're not supposed to guess tops or bottom. Let it form some pattern. Maybe it will form some pattern. It will give you strength signal. Okay. If you are into inclination of IRFC, it will give you some pattern. Okay. Okay. Now I'm making some pattern, some consolidation pattern, and at the breakout of the consolidation pattern, you are supposed to buy. So I will feel that this will clear a lot of doubts about it, because a lot of people keep on asking, okay, no, this stock has fallen so much. Shall I buy it? So first thing is never buy a dip. Wait for some pattern to appear. Once there is a breakout for certain pattern, then you can think of buying it if it's a strong stock. Okay, this is a pattern which I fought for Keynes, which has recently been formed. So what happened that it went to 2800 levels, came to 2250 levels, again consolidated, and it made an ascending triangle, went again to 2800 levels, came down again, made a higher top of 2500, and again went to 2800 level, and this time again refused to come down. Okay, and thereafter this shows that okay, chances are very bright that it will break out, and you can take a trade once it starts breaking out 2800 level. And either you can keep a stop loss at this point, which is like last low, or you can further keep it. If you are a swing trader, you can keep it further low, and you can assume that uska jo target will be there width of the triangle. So width of the triangle, if suppose this is the bottom of the triangle, 2250 to 2800, so roughly about 750 points. So close to 750 points, the top will be there. Close to 3300 level, 3250 level, you can assume as a target of this pattern. So in quickly, I'll just revise the patterns which I have said. We have read about double top, head and shoulder patterns. There's a pattern known as rising wedge and falling wedge. I'm deliberately not covering it because it further confuses people. So I'll say just avoid it. Their pattern reverse of this is double bottom and inverse head and shoulder patterns. More important patterns are continuation patterns. You are supposed to look for continuation patterns where there's a falling wedge, there's a bullish flag or a rectangle pattern or a bullish pennant, which is some sort of triangle formation which is getting formed, and then there's a breakout from these patterns. Now there are bilateral patterns known as like various triangles are there. So apart from ascending and descending triangle, there's a symmetrical triangle which can go either way. Either it can go up or down. So descending triangles are and ascending triangles are still gives you some indication that okay, because it's forming higher top, the chances are there. Whether it's ascending triangle and descending triangle are one of my favorite patterns because it's an uptrend. Trend has been up, and now it is making a higher top and higher bottom. Sorry, same top and higher bottom. So it further says, okay, there's hardly any supply. Every time there's a selling, people are ready to buy. The chances are very high that it will break out. Similarly, on a descending triangle pattern, chances are very high that it will break down because every time there's a bounce, people are ready to sell. So these are certain patterns. So now we have finished with the chart patterns. We have read about reversal pattern and continuation pattern. And as I will say, the continuation patterns are more reliable than the reversal pattern. Don't look for reversal pattern so easily, especially in the beginning. At this stage, try to look for continuation pattern. Okay, reversal pattern will get formed. Once the reversal pattern gets formed, you will come to know very easily. But don't try to judge the tops and bottoms. Okay, and more important, trading and investment is an art, and though it's a mix of art and science. So when we are talking about technicals, it's little bit scientific, but there's an artistic thing also in it. Like the support level, resistance level, they are not certain level. This is zone. So you have to think it as a zone. That chances of probability of happening this is higher. And it again depends on your temperament, how you take it in your temperament, that you have broader horizon of things, and you take it as a probability. Okay, the probability of one event is higher than the probability of other event, and that's all. So once you take it as a probability, it can happen. One chances of one event happening are more. You'll be ready to if the thing reverses also. But if you take it as sacrosanct, कि नहीं अगर ये pattern बनाया तो यही होना है, so that's not the case. It's just that these patterns have been seeing that probability of one kind of event happening after these kind of events are more than the other kind of happening. Then if I say reliability, the reliability of multiple candlestick chart is more than a single candlestick chart. Reliability of this chart patterns is more than the multiple candlestick patterns. And of course, there's a confluence of everything. Confluence of everything means whatever we have read till now, support resistances, volumes, chart patterns. So all these things, if they are coming together, then the indications are higher that the same thing may happen. But if it's happening and some suppose it's a breakout, but volumes are not correlating with the breakout, then chances are there the pattern may fail. So you have to, it's a confluence of signals which you have to see. So it's not always one thing, it's always a multiple things which you have to see, and that will help you out. So I will just cover a few things which I think are very important. The first thing is don't buy on dips. People are in habit of guessing the bottom, buying the dips. Don't buy the dips. So what happens if you have a mentality of buying on dips? Let's suppose you have a stock, you are thinking 100 se hai, agar main 80 pe aaya to kharidunga. So you buy at 80, and what happens, because you feel it will go up back to 100, I will sell it. But it goes only till 90, and uske baad you are not able to sell it. It further goes on to 70. So usually जब 70 पे आ गया है, तो I'll add some more, and उसके बाद मेरा average price will become, पहले था मेरा price was 80, my average price will become 78. तो अब 78 के आसपास आएगा तो मैं निकल जाऊंगा. And it may happen that you may exit, but it may happen that you may not exit also, and the stock keeps on going down, and you will keep on adding on dips every time. Every time it will bounces, but it will not bounce at the level which you are thinking that it will come out, and it will keep on going down. So what will happen? The people who buy on dips, उनका problem क्या होता है कि if it dips further, so you will try to buy more. So which you have to avoid. Never ever try to buy on dips. And this is happening in the beginning. Like what happens most of the time, most of the people they enter in the bull market, they are in habit of buying dips because they buy on dips, market goes up, they sell it. And because the bull market is an uptrend, every time, most of the time, their philosophy works. But when the trend will change, or the trend will change the stock also, the philosophy will not work. But they only know how to buy on dips. So what will happen? They will keep on waiting कि dip आएगा तो खरीदूंगा. They will not buy a stock when going high or breaking out patterns. They will only buy a stock when it's dipping or sharp correction आ गया कि यहाँ से ऊपर जाएगा. But you should avoid it, okay? And what happens? You will otherwise it will happen. You will get stuck in stocks. Like this is the example of Unitech, which was at 300 levels, and it went up to the level of 5 rupees. So if you would have kept on buying, your major investment would have been this stock. and you would have never been able to come out. And there's the other example also like Paytm. Like Paytm, if you think it's a good stock, you kept on buying on dips. So it would have, kind of, you would have been accumulating it and would have been adding it throughout, but you will not get an exit. And your major portion will go into these kind of stocks. So again, don't buy the stocks which are forming new bottoms or something like say, just Yes Bank. Okay, people try to, they justified buying Yes Bank also. Like even Yes Bank is not supposed to be bought. You have to, you have to feel that you should be ready to miss out on these opportunities. So I will not buy a stock which is falling so drastically. I will not do bottom fishing because if a stock is falling because something is gone wrong in that stock. So never try to buy a bottom fishing, never try to add the stock. And problem with retailers are that maximum retailers add to these stocks. So if you see Yes Bank, if you see the chart and all, if you see who are holding, so maximum retailers are holding because they have been adding in all dips, right? So what happens once you keep on adding, very rarely these kind of stocks will go up. So though Yes Bank has gone up, but it is remained from 2020 till like 2000 इतने level तक वो it is still between 25 to 20 के आसपास ही चल रहा है वो. And finally it has broken out recently with decent amount of volume. But then also I will say that once the stock has broken down so much, at every higher level there are sellers sitting. Like there are people who have average cost of 45, who have average cost of 40. So whenever it goes to 40, they will sell it. Whenever it goes to 45, they will sell it. So these kind of stocks is very difficult for them to make a new high again. So try to avoid. It's always better to buy a stock which is going up instead rather than to buy a stock which is going down. So this was like Yes Bank, which has broken out recently. So had you been in a pattern of buying on breakouts, so you could have bought here itself rather than wasting your 3 years. You would have bought on a breakout, or maybe you would have bought it here with a stop loss of maybe यहाँ के low के लिए. So it's better to buy on breakouts rather than to buy on dips. Okay. So like this is a chart of Adani Green. Adani Green fell from 3,000 to level of 500 rupees. So what will happen that if you are thinking of buying at dips now, so what will happen? You will end up buying here. You will end up buying here maybe because it has corrected so much. You may add your position. It may go down further. And luckily this stock has revert, but what will happen? You'll keep on adding on dips, and one stock is like that which will not reward you. So in this case, what has happened? See, it made a pattern. It's kind of continuation pattern. If you see, okay, it was there till 1,000 level and finally it broke out 1,000 level. So if you have to buy, then buy at the level when it's breaking out. Don't try to buy at कि मैं bottom guess कर लूंगा. Don't try to do that. If you are doing it, then do it this way. Okay, even if you are buying a stock which has fallen quite a lot, do it in a continuation pattern. Where it is going up and now it's consolidating for a decent amount of time, and now it's breaking out with volumes. यहाँ पे if you see volumes are good. Volumes are good. So now you can say, okay, finally it's breaking out 1,000 level and volumes are good, supported by volumes. So now I can buy, and my stop loss is not that far. I have a stop loss. In this case, you don't have a stop loss. So always, first thing is when you're shorting a trade, the first thing you should look for, where is my stop loss? So where's the risk? If there's a very deep stop loss, then don't take a trade.
Sir, in continuation pattern, sir, the example which you gave of Adani Green, how much time should we wait for the continuation pattern? I mean, this is a say monthly chart. So how much time should we see that because for different time intervals, we can see different kind of breakouts.
Right. So what happens? Time frame is again depends on your time horizon. So what will happen? Suppose I am a shortlisting a stock. So let's suppose I'm shorting Adani Green also. So once I'm shortlisting Adani Green, so I will see some long-term pattern first. You have to go to the long-term pattern, and then I will gradually come to short-term pattern. So I'll see yearly chart. Okay, what the yearly charts thing? Then I'll come to maybe 3 month chart. What the 3 month chart is thing? Now in 3 month charts, I will say, okay, there's a consolidation pattern. And now maybe I'll further zero it down to daily chart, and then I'll see, okay, how it is behaving in the last few days. Now, can I get an entry which is giving me a smaller stop loss, maybe 2% के आसपास का stop loss है, and target is close to 10%. So I will zero it down that way. So from higher time frame, I come to lower time frame, and I will see the setups. Now is the setup meeting up my requirements, and is offering me an opportunity जहाँ पे risk and rewards are better. So that's how I will look at it. There is no simple answer that you should look for this pattern or you should look for 3 months pattern or 6 month pattern. Like I said, it's an art. So if you are able to see a pattern, you see a bigger pattern, you see, okay, some strength is there. You come to lower pattern, okay, some strength is there. You come to further lower pattern, and then you see, now I can see an entry, and it's further confirmed by certain other parameters. So now I can take a long position in Adani Entertainment, kind of. Fine. Okay.
Right, sir.
So this is like now you have to, why I'm saying you see जैसे अभी मैंने cover किया कि you should see different time patterns. So similarly I cover that how importance of time frame is important. Now Bajaj Finance we have covered today and we covered in detail about head and shoulder pattern. But if you see this is just about 3 to 6 months chart, like it happened in July में top बनाए somewhere मतलब एक साल के आसपास का chart है. But if you go longer, so if you go longer we see okay it's an uptrend. It went to 8,000 level. 8,000 say it came to separate 5,000 level and now it is consolidating between 8,000 to 5,000 level. So now my the way I'm thinking will change because now I know in the longer term it's a consolidation pattern and it is within the range of close to about 3,000 points, 2,700 to this point. And now if I'm taking a trade, so I will have this thing in mind. Okay, by further, it's a short-term trade which I'm taking, but longer term it's just under it's a huge consolidation pattern which Kotak Bank are going through. So that way you are thinking you will have a better picture of things. You will start thinking in probabilities, which is a must for a trader. Okay, and this chart I have deliberately put. This is head and shoulder pattern, which was found by Nifty in 2008. So head and shoulder pattern is a bottom formation, is a topping out formation, but this bottom was formed at a bottom of a downtrend. So if you see there was a left hand shoulder pattern, there's a kind of a head which is equal to left hand shoulder pattern, and then market went down, and this is a right hand shoulder, and then market broke it down, okay, close to this level. But then market reversed, okay, and reversed and took out the high of this shoulder. So sometimes these patterns fails also, and when these patterns fail, so they give a reverse signal. So though head and shoulder pattern is a topping out formation, but in this case, it gave a reverse signal that is a failed head and shoulder pattern. And then market started going up and went up quite a lot. So this also has to be kept in mind. Once a pattern is failed, it gives us a reverse signal. So suppose there's a bullish flag pattern and there's a breakout and the breakout fails. So then it's a reversal of a bullish flag pattern. Means chances are there that now whoever is long is grabbed and chances are there that it can go down further. Okay, so I will like to cover, if all you are in, so I like to cover a little bit of a case study about few traders whom I have studied, and it will be help you out also. So first and foremost thing is like you have to understand that market in the long term is an uptrend. Okay, so what happens because market in very long trend will remain in uptrend, so your trade should be more biased towards the long side rather than on the short side. Instead of guessing bottoms, instead of guessing tops, try to look for continuation pattern. Try to look for those patterns. Okay, maybe the bottom is getting formed and there's a breakout now, and you will go long. Rather than trying to guess tops and breakdown patterns, उनको कम करना चाहिए trade. क्योंकि क्या होता है कि what happens? You have to understand that market is designed in such a way. Market is an asset class like other asset class. It is designed in such a way that long term the prices will keep on moving higher. So chances of those patterns which gives a sell signal of their succeeding is always lesser than patterns which are giving a bullish signal. So in the long term, always try to trade those signals which are on the bullish. Rather than I say many traders, many good traders, they never take a trade on the short side. They always avoid it. They will say, okay, it's a signal which is telling me, asking me to short a stock, but I will not short it. But whenever time comes to buy a stock or gives a buy signal, I will buy the stock. And I have seen their performance is quite good. So what happens in short side means that most of the time short sellers will get trapped. Suppose there's a double top formation and double top के बाद we break down the neckline, it will go down further, but then वो reverse कर जाएगा and it will make a it will look like a flat pattern after some time rather than a double top, and people get trapped into it and they'll be rally after that. So I will it's like my personal experience which I like to share, that don't try to take trades, especially in the initial years. Don't take any trade on the short side. Always try to look for trades on the long side, and always look for a continuation pattern. Try to trade from a continuation pattern. Now I will just share a few examples of which is a case study. I'll say there are few traders. There's a Jesse Livermore. Jesse Livermore is a very well-known trader of 1929. In 1929, he used to short market, and he was the richest man in 1929 because he shorted in huge quantity. And he was called by president once, just so that he was asked if he can remove some part of the position, and badle mein he was given some money also. And such a big trader he was. Like he was able to corner market. and he has the art of going with the trend and used to make a lot of money. So what happens in 1929? He was the biggest trader and he made a lot of money. And उससे पहले he had gone bust 3 times. तो 3 बार वो bankruptcy पे जा चुका था उससे पहले. And he had a history of going into bankruptcy. उससे पहले भी when he was child also he had been trading from last. He was like started trading when he was 12 to 13 years old. So he used to have this pattern of going into bankruptcy again and again. So what happened? 1929 में he became the richest man. And 1932, just 4 years, मतलब 33 के आसपास, that's 4 years after that, he went bankrupt again. Okay. So what happened? What mistake he did was that 1929 में American market crashed and it crashed 90%. And he was carrying his short position and he made huge amount of wealth. And उसके बाद what happened? Market started bouncing. And every bounce pay he kept on kept on adding his shorts. So market went up, he added short. Market came down a little bit, again went up. So उसके दोबारा he added short. And market kept on going up and he kept on adding short. Something like which happened in Sona के time पे, that हमारा market went down to 7,500 levels and उसके बाद kept on going up. So anyone who would have kept on adding short, he was like very fixated trader. He was very sure the economy recover नहीं हो रही है, so market will not go up. Any rally is bound to go back again. There is no formation of double bottom or something like that. Market kept on rising. He kept on going, adding on to short, and finally became bankrupt. Okay, again. So what I mean to say, if you see, there's a pattern in his trading that he had a pattern of getting bankrupt because he had a very high conviction in his trade. So whenever he used to take conviction, uska advantage bhi था कि he used to make a lot of money because he had very high conviction. So whenever there's a crash and he was very sure about it, he take it with a very big positions and he made a lot of money. But because of that high conviction only, when the market started rallying, he could not change his opinion because of such a high conviction. He kept on holding it unless he became bankrupt. So this is one kind of trader, Jesse Livermore. Now, other than Warren Buffett, we all know Warren Buffett is very popular trader, very popular investor and trader. He's the richest. At one point, he was richest. As of now, he's the 10th richest man in the world. So he is like kind of very long-term investor and I would say trader. He's very consistent person. His life is very consistent. Unlike Jesse Livermore married 3 times, number of kids, divorces, and all those things. And so that pattern was reflected in his trading also. Similarly, Warren Buffett is very consistent person, very reliable person, and that pattern is reflected in his trading style also. So when he has been growing his wealth at a rate of just 22%. So 22% he is compounding, and he started a long time back, and of course he's 90 years old, so he has amassed huge amount of wealth, right? So only thing, he's doing something consistently. He's consistently buying good stocks, holds them, keep on holding them, and just reap the benefits of compounding. Okay, so there's a marked difference between Jesse Livermore and Warren Buffett. So you should be in the likes of Warren Buffett and not Jesse Livermore. Jesse Livermore has a problem in his personal life also, and that was reflected in the stock market behavior also. So whatever your personal life will be, the same way it will be reflected in your market behavior also. Like suppose you are disciplined, so you'll be disciplined in market also. But suppose you are not disciplined, so it will be reflected in again your market behavior also. When you are interacting with market, then again those traits will come out. So if you are consistent in your life, if you are, if your relationship around you are fine, the chances are very high your relationship with the stock market will also be good. But if you have a strained relationship with everyone else around, so again chances are very high you will have a strained relationship with the stock market also. Okay. Now I'll cover one more trader known as Nicholas Darvas, which made a theory of Darvas theory. So what he used to do is he used to only trade box pattern, like which is a continuation pattern, some sort of flag pattern. He thought that he will only trade flag patterns in his life. So he traded only flag patterns. So whenever he used to find a stock consolidating in a pattern, box sort of pattern, he used to just earmark those stocks. And he only used to buy only those stocks which are breaking out from that box pattern. Throughout his life, he traded only this pattern and he made amassed huge amount of wealth. So what I mean to say is you have to find out what works for you and you have to follow that pattern. Okay, you don't have to know a lot for making money in the stock market. You have to, like in this case, you just followed only one pattern, he made a lot of money. So there's no end to finding out technical analysis. See, I'll cover in the next few chapters, I'll cover few things more, like Fibonacci series, simple moving average, MACD, and some other part also. But there'll be much more to cover, like technical analysis, like against a very huge thing. Even if you cover everything, it will not make a lot of difference. You should know few things about it. And if you know few things about some pattern, then whatever suits you, find out that pattern, find out that thing. That for me, it's chart pattern. Chart pattern suits me. For you, it may be simple moving averages. So whatever suits you and whatever suits your personality, find out that thing and trade as per those patterns. Okay. And as I'm finishing my session, thereafter I'll take question and answer. I asked in the group, to make money, one has to know what the market is going to do next. So these are the question which I asked, and certain people said yes, certain people say no. So I just want to clarify that it is not that. It is not that you should know what the market is going to do next to make money. It is that you should be made. It is something like you should make yourself available for the market possibilities. Okay, market can do anything. You should always assume that market can do anything. Only thing what you have to do is that you should be available to take or to listen whatever the market is saying, rather than trying to guess the market, that market what the market will do. So if you change your thinking in that way, that rather than trying to find out what the market will do, and rather than just be available to do what the market is offering you. So rather than trying to find out, okay, what market do, just be available to look for that support, resistance, or some flag pattern. And once it happens, you just take a trade, rather than thinking ki kya hoga iska, and with a stop loss and with a defined risk and target. So that will give you money rather than trying to find out what will happen in the market. So with this, we end today's session. And in the next section, we'll cover some of other technical parameters such as simple moving average, MACD, ATR, ADX, and some part of maybe section 6 also, Dow theory, Fibonacci series, and elite wave and momentum trading, depending on time frame. And now I'm open to questions if there are any for this session. So there are no questions. I've explained everything very well. So shall I close the session now? Anyone, anything else you want to ask?
Sir,
Presently, no questions. Thank you.
Yeah, ma'am, please. So no more questions?
sir, I wanted to ask, you just covered the head and shoulder pattern,
Right.
where instead of breaking down, that pattern has come and it has gone up.
Yeah.
So again, patterns are subject to the way we analyze it or the way we appreciate it. So
Right.
wouldn't it form something like a triple bottom kind of a structure or something like that?
So you
It may
can
not-
call you can call it a triple bottom also, like you go to the pattern where this was the pattern, right? So this was the pattern. So it can be called as triple bottom also, because यहाँ पे एक bottom बना है, यहाँ पे एक bottom बना है, यहाँ पे भी एक bottom बना है. See, my aim was to just to say that these patterns not always work. So that was I was trying to convey. Like you should not be blindly to if head and shoulder pattern बन गया है तो वो नीचे ही जाएगा, ये नहीं सोचना चाहिए. Sometimes head and shoulder pattern is a reversal pattern also. Sometimes it's a continuation pattern also. So I was trying to just convey that point. But yeah, you can say that there's a triple. You can say it's a triple bottom also. जहाँ पे this line was held and it made a triple bottom, and thereafter market went up.
Sir, one more tactical question, probably not directly related to the session. I believe you are also using Kotak Neo. I am also using Kotak Neo. So
Right.
maybe I'll connect with you separately on how to place moving stop losses, trailing stop loss.
Okay. So again, see, it will depend what kind of trade you have taken. So maybe you can connect directly with me, and depending on what kind of trade you have taken, why you have taken that trade, उस पे we can dwell upon that how to move the trailing stop loss.
Got that, sir.
Anyone else? Fine. So I'll follow the session today, and thank you so much for joining the session. Next session we will do on most likely on Saturday morning, because then I have to take a flight to Delhi in the evening, and I will not be available on Sunday. So I will try to do the session on Saturday at 11 o'clock or maybe at 10 o'clock also. I'll update that.
One request. Actually, I'm also working, so it won't be possible for me for Saturday morning. Can you do it on Saturday evening?
Ma'am, my flight is there on Saturday evening, so I'm not able to do that.
Okay.
But you can for this time I'll only this time we do on Saturday. Otherwise, I'll keep on Sunday most likely.
Okay, no problem. Thank you.
Thank you, sir.
Okay. Thank you. So
Thank you, sir. Thank you, sir.